Hello everyone, my name is Rosina Maherzan and my student ID is NPS 25002. This is a video presentation for the subject corporate accounting. It is an individual assignment and we had to choose any one of the company which is listed in ASX and had to study its financial statement including balance sheet, income statement, cash flow statement, income tax issues. For this assignment, I chose Newcrest Mining Limited, which is one of the Australia's largest gold mining company, which with its market capitalization of nearly $16 billion, and which is also listed in ASX with code NCM. For this assignment, we had to answer 9 different questions, and based on my report, I will answer them one by one. So the first question is to explain different terms and concept in accounting for income tax. The first one is accounting profit. It is a bookkeeping profit or net income of the company that is obtained by deducting total revenue of the company. It is the net income reported in the financial statement of the company. For Newcrest Mining Limited, the company has earned $558 million and $209 million during the year 2019 and 2018 respectively as accounting profit. The second one is taxable profit, which is the amount remaining after paying interest expense to the creditors upon which income tax can be levied. It is the profit before income tax that can be seen on financial statement of the company. Newcrest Mining Limited are liable to pay 30% tax on their income, and their income before tax for year 2019 and 2018 was US dollar 830 million and US dollar 327 million respectively. The tax payable according to tax rate for 30% and with tax adjustment from previous year, the tax expense for the year 2019 and 2018 was US dollar 272 million and 118 million respectively. According to another term is temporary difference, which occurs between because of differences in recording of assets and liabilities in a different time period. It may create differences in financial statement, which is also referred to as timing difference. The reason that may lead to temporary difference is depreciation, accrual liability, and estimates, but it can be deductible and or taxable. The next one is deductible temporary difference. It will result to amount that can be used in next year to determine taxable profit or loss. And another one is taxable temporary difference. It results in taxable amount in next year to determine taxable profit or loss. And deferred tax rate, it is used to carry forward unused tax credit or losses from previous year to the extent possible for the calculation of probable taxable profit that may result in future years of business. Next term is deferred tax liability. It is the tax payable amount from previous year for the calculation of probable taxable profit or loss that may result in future year of business. It is calculated on the tax rate applicable during the year when the liability is released. And the second question is recognition criteria of deferred tax assets or liabilities at Newcrest Mining Limited. So the recognition criteria are management judgment, estimates, and assumptions are used to recognize deferred tax assets and liabilities in the financial statements. It has recognized US dollar 60 million and US dollar 69 million as deferred tax assets in financial statement of the year 2019 and 2018 respectively. Similarly, the company has recognized US dollar 944 million and US dollar 1007 million as deferred tax liability in consolidated statement of financial position as on 2019 and 2018 respectively. Next question, question number 3 is that needs to be answered is firm's tax expense. So from the financial statement, the income tax expense or the tax expense of the current year only before any adjustment is US dollar 259 million and US dollar 116 million during 2019 and 2018. Fourth question is if the company tax rate times firm's accounting income is same. And answer to this question is that Newcrest Mining Limited had to pay more tax expense than the company tax rate. It is explained in the report, and some of the reasons are the company had deferred tax liability carried forwarded from previous years, and next one is non-deductible business development expenditure which could not be recorded as expenditure in the income statement, unrecognized deferred tax assets which was recognized as asset in previous year but could not be recorded by the company due to some reasons. The company also needed to make adjustment of significant items for the year 2018 like impairment loss on investment, write down of fixed assets and tax assets. And here we come to the fifth question. So question 5 is Newcrest Mining has recorded deferred tax assets as non-current asset in the balance sheet amounting to US dollar 60 million and US dollar 69 million in the year 2019 and 2018 respectively. Similarly, deferred tax liability is recorded as non-current liability in balance sheet amounting to US dollar 944 million and US dollar 1007 in the year 2019 and 2018 respectively. Next question is about current tax assets or income tax payable recorded by Newcrest Mining. So current tax assets under current asset of balance sheet is US dollar 32 million and US dollar 1 million during the year 2019 and 2018 respectively. And income tax expense is US dollar 272 million and US dollar 118 million during the year 2019 and 2018 respectively. Whereas income tax payable for Newcrest Mining is US dollar 176 million and US dollar 99 million in the year ended in 2019 and 2018 respectively. There is a difference in the income tax expense and income tax payable because there is a difference in accounting for financial system and tax accounting. So income tax expense shown in the income statement is different from income tax paid in the flow statement. For Newcrest Mining Limited, income tax expense for the year 2019 and 2018 is US dollar 272 million and US dollar 118 million respectively, whereas the company paid US dollar 165 million and US dollar 69 million during the year 2019 and 2018 respectively. Now we come to the question number 8, and question number 8 asks about temporary difference and permanent difference. Temporary difference occur because of timing difference. It is mainly due to the difference in financial accounting and tax accounting, which uses different methods for recording or depreciation expense, accrual liability and estimates, whereas permanent difference arise due to different reporting in financial accounting and tax accounting. In case of Newcrest Mining, it has not recorded any permanent difference in its financial statement for the year 2019 and 2018, but temporary difference can be seen in fixed assets, calculating and provisioning in notes to different tax segments. And the last question is question number 9 that needs to be answered is about interesting, confusing, and surprising treatment of tax in financial statements. Um, so I found treatment of tax expense in financial accounting and tax accounting to be interesting. This technique can be used to lower the tax amount when the profit to the company is lower and increase the tax amount when the company is making a lot of profit. Confusing part is the calculation of current income tax, and surprising thing is we can extend the time period for payment of tax, and the company is not liable to pay any fines or interest on the payable amount. So these are the questions that we had to discuss in this report, and this is the enough the presentation. Thank you and stay safe.